Good morning, class. Welcome to Homeroom with Unc and Market Monk. Morning, P. How was your year?
Year was good. Just lot of lot of stuff panned out for me. Long term account, really solid. Just kind of refined some of my methods. Started that ER page this year. That's gone really well for me too. So yeah, getting to a point thinking about my career and what maybe how long I want to teach. 8 years, 10 years, I don't know. Sort of just depends on how trading continues to go for me with consistency and really worked on kind of just trusting the work more this year, more shares, just longer swings, that kind of thing.
Nice, nice. So we definitely came into this year still wondering if we were going to get a head fake on that September to January thesis, and I probably rode
Yeah.
that till I pounded it in January, or yeah, January. I asked probably 3 or 4 times, where's the downside at, Pete? Where's the downside? And it really
Right,
took
right.
it took me like 4 months to figure out, well, we're probably not going to have a complete pullback. Some things are checked out, and to be honest or fair with myself, I kind of got out of Nvidia a little early, which put me into the not into a bad situation, but it extended my tax situation for me. So I had to kind of be mindful the rest of the year on keeping stuff a little bit more, um,
Yeah.
which I didn't start doing until about September, and then October. Like I was kind of already in about October, and that's when I started to tell everybody, guys, you just need some time. Hold on for a little bit. So I mean, I don't want to say I fumbled the bag, but I could have definitely done better if I was giving myself a letter grade for the year. Probably be a B minus or a C plus. Just that's retrospectively. I mean, we just had SPY didn't touch the 50 all year, right? So I mean, we had a very bull market, and in general, you should probably everyone should probably be around there too. If you lost in this market over the year or you're flat, you really need to be consulting someone you trust, whether it's us or anybody at this point in time, because this year was really hard to not win. At least in a couple things you believe in. If you were a long term trader, it is impossible to lose this year because a long term trader you're going to buy and you're going to hold for a long time. If we go back to my Tesla last year, excuse me, 2 years ago, Tesla, when I was like, it's $100, just hold it for 5 years. Well, you bounced around for about a year. You were up 100, at least 40% to 100% the whole year, and now you're up five, and we're 2 years in. So the long term stuff, like you really couldn't miss. Um, Trading though, overall, I probably could have done a little better, just because um, I was overly patient with not trusting the market.
Yeah, I mean, so yeah, for me, the example of maybe should have held it longer, and I kept some, but yeah, MSTR. You just look at where that was pre-split, what our levels were, where we were buying, and sort of where that where that thing went again. But just I mean, this is just such a unique. That one was such a unique market situation. I mean, it went past its like .com bubble drop, and it dropped 98% back then. So just a completely crazy stock. But coin, I did better this year keeping some than I did the previous year. So I was really focused on that. I thought the way that we've refined, our work on crypto, it just keeps getting better and better. I think we've always been pretty good at spotting the ones to get, the ones to avoid, and when. But I think that kind of went to the next level this year with Bitdeer and Hut and Hive and a few others. And CLSK was a massive one for us, but
The other
we
way,
also
though, I
nope.
mean, you legit said the whole time, "Leave it alone, leave it alone," and I
Yeah,
think I
yeah,
think you're
right,
still
right.
today saying, "Leave it alone." So,
Yeah, yeah. No, I am right. Um, yeah, it just you can just see how it's reacting to the option flow, really, for me. And then I know your TA on it, so
I'm just cheap.
yeah, still just not a good spot. And if your average is 17 and you're hoping for 30, that's pretty rough. Bit Deer was easier as far as that kind of game goes.
Yeah, I have problems. Two great examples for me, P. Especially this year where I was looking for things to hold past January 1st for tax implications, and stuff like
Yeah,
MSTR. It just and CLSK here too. Well, but you have to backtrack a year. Hard for me to hold those names. Just that it's just the way I grew up trading. All stocks are shit. It's one of my taglines, right? And I just don't like getting caught up in the story. And the MSTR story is amazing. It's just a good story. Not that it's gonna make money. Not that it's a new product or innovation. It's just a good story, and I need to change that. The really good stories, because you're a good story finder. I don't want to say storyteller, but you find
yeah,
when this is about to get good.
right, right.
Like you can see that. So the nuclear, like that's
Trained.
another
I'm
good one.
trained in literary.
Go ahead. Sorry.
Yeah, yeah. I mean, I'm trained in literary criticism.
Yeah,
I went to
exactly.
college all these years about, so it's like breaking down stories. I mean, that's sort of what I'm. One of the things I recognize, and quantum computing didn't come from my knowledge of it. I read about it. I've looked into it. I think I know more about it than a lot of people do. I mean, certainly the people setting up QUBT to the moon accounts now. But yeah, I mean, it really was just it had kind of all the hallmarks of this IA adjacent next thing, and um, the I'm really pleased with the way that we identified the names there, and then you kind of went to work on the TA, but it was everything from Honeywell and
Yep.
Google, to IonQ and Rigetti were kind of our central focus, and then as often happens, you get these names on the periphery. They got the right ticker. They're not really the companies themselves aren't really doing much, and people love to point that out after they run. But that's not what's moving them. It is that story, and you're some quantum SaaS consulting firm or something like that, and then the stock just has a monster week. People chase it. You sell into that without even having to pump it because you were already in, and there we go.
Yeah, that that sector was I guess the perfect storm for me because of the it was almost like the second movie, because AI was the original movie, and then quantum computing, you came up with the theory real early that quantum computing would be needed just to make AI work, and then that goes to wait their competition, and as soon as that happened, those charts took off. But as a bottom feeder or a cheap guy, or I don't know, however you want to put it, um, yeah, I love when charts are consolidating for long periods of times, and there's range there, and that whole sector just had that. I mean, those charts were A+ when you found them. P. Rigetti was $1, or maybe even sub-dollar, maybe even 80 cents, and then INOQ we argued about 780 to 707 for a while, and yeah. Then the QSs come in, and 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 you just kind of attack from there.
Right.
But I think that goes. I mean, crypto should teach people that. I think that's where you learned it. I definitely learned it from crypto and a little bit from the EV chargers. But if you're early,
Yeah.
if you're there and you're early, you have to understand most people are like 9 to 5 out in the world, right? And they're only going to check in once a month. If you're there every day and early, that's an advantage to you, and you really should attack when you see something like that. Um, yeah, and that was I mean, we were talking about that 2 quarters early, so um, good to see it play out. Again, it's why I always stress we're robbing Wall Street. You're not going to get the bottom down here, and you're not going to get the top. You're lucky if you get one. Take a chunk out of the middle, call it a day, get on to the next one, keep doing the work. So, good example of that for me.
I keep finding myself being wrong on the the time it takes for these moves to happen. But I don't really want to change that. Because I'd rather think that it's going to take IonQ 2 years to get to the level it's at now, and then have it happen earlier, than to expect and trade like you're gonna get a move sooner. Well, in options especially, that kills people. Just that when that time starts to work against you. But even in shares, I think just having a kind of conservative expectation, even though as I say it, I know it's probably going to happen sooner than that. I'd rather it's kind of working, so I'd rather stick to that
Yes.
than to say like, oh, this is going to go the next 2 weeks or something like that. So because if you just I keep I've been saying it. I put it in the notes this week on some of them. It's like I'm just going to park some money here and wait it out. And there are some stocks that people forgot about, or they look like trash right now. And I'm happy to just park and wait in some of those names. And April, March, September next year, they'll have their day. We've been on them too many times, and we'll talk about those names in a different session. But yeah, no, I think the moves happening faster than expected was definitely a big theme this year too.
Yeah, the only chart I can ever really think of, I don't know why it stands out. It was 9 though, where we actually didn't really line up on the timing. Jesus, I had a shit year since then. We didn't really line up on the timing down here in my channel. But when we got to this upper level, I had to throw another
Yeah.
line on the chart because you're like, this is going to 15. And that's just not, this is the setup right here. It's on the screen. This is not how we play. We usually don't play that secondary high or low continuation play. Maybe that's something we kind of look into. But you always ask me for a level, and then I say they're checked out. But 9 is the only one I can think of in our career where I had a pretty low channel, and then I kept just beating you over the head with it, like, why, get a read, and then you were like, yeah, this is going to go to 15. So maybe that's somewhere
Right.
we do kind
Yeah.
of step our game up going forward, but I am with you on the, if it's not broke, don't fix it. Because coin's currently
No,
that.
absolutely
Coin's
right.
currently that, right? And then all the quantum charts are that way today.
Yes, absolutely. And yeah, and coin. I caught some really nice pullbacks on that, and sort of found some local pivots as we moved up in spots on the chart where there really wasn't much there. Coin, when it fell way back when I was like, hey, is 200 a thing on the way down? And you're like, no, not at all. It dropped to 40 something dollars. But on the way up, finding some spots at like 120, 180, definitely worked. And then
Yes.
the big win that into crypto was that election and that reaction to it. And obviously would have held more, had more if you knew it was going to do that. But the Bitcoin to 100K thing, that was something we talked about way early as well. And at the time we were talking about that, and I think it was July, um, crypto did not look very good. I think like July 4th, it just had a disastrous day, and then bounced back from that, and then kind of took off. But it's is one of those sectors where just in the crypto services, our decision to separate those from the miners was, I think, one of the better strategic things that we did. And I'm not, this whole session isn't just going to be about us saying how great we are, but that to me is something that I want to try to really work on within other sectors, because really, Square and PayPal, financial services, of course, that's what they are. They are also crypto stocks,
Yeah, that's where I went.
thinking about them in that way, and just being those are the ones that I didn't even really trade. Those were like more investments, and coin is like that for me. MSTR is like that for me. I have a a different approach to MSTR than you, which is fine. But yeah. Anyway, so like looking at oil, looking at some things within metals, real estate. I mean, they all have these kind of nuances within the sector, and part of what I want to keep trying to learn to do is to make some of those same visions, because when oil takes off, deep sea drilling, pipelines, tankers, or big dog, everything oil stocks, they're all going to trade differently. And you can kind of maximize your exposure in those sectors if you approach it in that way.
I mean, off the rip for me. Well, let me backtrack a little bit there. Um, yeah, we definitely don't do as great of a job separating the winners from the losers after that initial sector euphoria outside of crypto. So yeah, I'm definitely need to focus on that a little more, but because people shouldn't be holding Riot, Mara, Hut, Hive, SDIG, all those, probably be BTDR, all of those, IRIN, shouldn't be holding those long term. Like, that's just going to be a euphoric trade, and you're going to hold Coin, Square, PayPal, stuff like that, in my opinion. And then that goes for any sector out there. You could probably do the same thing with the AI sector too. Like you're going to probably want to have Google and Honeywell, and not the actual AI ticker or the BBAI ticker. Like those aren't you're trading those for a short term over 100% move that you're not going to get with and oil. I think is the easiest way to put that, or to show that. Like we're gonna buy a rig. That's gonna happen. Rig's gonna probably 100%, maybe even more. But you're gonna sell all of that if you buy Cop down here or Exxon down here. You can give that to your kids when you die. I mean, they're just
Right.
different. They're
Yeah.
just different trades. So having
Yeah.
that, maybe we need an emoji for that, but that's something everyone should be thinking when they're trading anything, I guess. And if you do want to kind of hold on or build a portfolio through trading, so. But oil, I think, is the best example, Pete. Like, there's some very clear cut. Like, this is an investment stock, and just trade this for the move you see coming.
Yeah, absolutely. And then you get some that I mean, one of my best oil trade ever was Oxy, but the second one was MRO, and I mean that was cheap. That was a cheap stock, and it hit some levels and held on to them really well, and then it got bought out, and that was it. But the that the other thing I'll say is I've gotten really pretty good with small caps lately, and part of it might be market conditions. So I'm trying to, as I go back and study things, review, because I've changed some things in how I filter small
Sure,
caps.
sure.
Is this working because of these changes I made, or is that kind of confirmation bias, and these are market conditions? And one of the ways I'm going to kind of put some pressure on that idea is to look at some of these mid caps, because I think if what I did with small caps starts to work with mid caps, I think I might have something here. And
Oh, 100%.
then and part of it too, like the market's been has not given us the pullbacks, so I haven't had. I learned to trade in a pretty shitty market,
Yes.
because I got in at the like late on the memes, lost some on those, and started to learn how to do this. And as I was doing that, market started to go to shit. So I went into oil and X and like steel and copper and stuff. But yeah, I mean, if we do actually get a sustained pullback, I am very interested in that, to see how this whole system I've built since then, how it holds up, and how the reads come out of it, when the market is going down. In these short spurts that it's gone down, it's worked very well. But like a sustained move down over weeks or a month or something, I'm really interested to see how how that plays out with what we do.
Not to backtrack too much, but I wanted a couple points off of what you just said. You know my best oil trade. I don't even think it's this year. It's probably ever the oil stock I've made the most money off of.
The gush.
No, no, that doesn't count. That was before us.
Oh, okay.
Good
Um,
call, P.
yeah.
No, but I think I've actually made more off of this one.
Oh,
Next,
really?
next,
Oh, right. Okay. Yeah. Yeah.
next. It's just respectful. I
Right.
mean, look at this tank. You think I tell me I
Yeah.
ain't made
Yeah.
money there?
Right. Right.
I mean, come on. Tell me I ain't made money there. And it's just easy. It just fits that buy it on the level, sell it on the way
Yeah.
up. Buy it on the level, sell it on the way up. The other ones are
And look.
have been a little harder for me because you need some capital. You're gonna have to want to be long term, and it's not gonna move as effectively.
Look at the aggression on the selling too.
Yeah, yeah, that's why you don't fuck around when it hits that $7, $8.
Right. Yeah. Yeah.
But yeah, that's it. And again, I got that chart from you, but it goes to like I have no hope in that chart, right? Like none at all. I don't even really follow the news on that chart. I just trade those two levels. And
Yeah.
um, going into the second part of that, the pullback. I don't know about you, but Thursday I was like, all right, I'm gonna have I'm gonna have some jabs to throw, and this everything I put that was on a level this weekend, even though we were just doing notes, you could tell that on your end it was starting to chime in a little bit, which is what I think that's if you want to know what to look for and what we do, it's those levels hitting and then the flow coming in. That's check 1 and check 2. We're on a historical level. The flow is picking up. These guys are making moves and defending it and um,
Yeah.
and if it's not there, walk away. And I think we do that pretty good. Just haven't had that opportunity this entire year. So to kind of see that kick here Thursday, yeah, I would love to go to like 560, 550. I really would, because it's just going to give us clarity in what we do.
Yeah. I mean, like it. Uh, I didn't plan to trade a lot yesterday, but the way that some of the pre-market moves down, and I just would look up like Duolingo. I mean, I was on. I mean, the best trade of that was the shares and hold, but I saw it dropped 3% pre-market, and it didn't come back during pre-market. And I'm like, all right, I'm going to try to catch them asleep here because this is not going to stay down here. And it closed the day up like 1.5%. Kind of a low IV, has that float characteristic I like in share construction. A really really easy trade and just kind of a home run there. And then part of kind of the character of the stock. I've seen so many earning cycles in some of these that I'm
Yeah.
like, okay, when FedEx is up 10%, 12% pre-market, uh, it's going to give that back in the morning, and it can give back a lot of it. So that's why that's why I put that up there. So I'm still kind of on those quick hitters, but the for me, like a change I've made is it's kind of following my own advice that it's exhausting to try to start over every day.
Yeah.
Like you have an options trading account, you have a good day, and it's like, all right, sold all those options. The account is up $400 today, and I'm going to go at it again tomorrow, and then I'm going to go at it again the next day. And I'm going to go at it again the next day. It's a lot better psychologically if you're doing that. Have that be a really small part of what you do, and keep it small, and then have things that you can build. And then I check the news section every morning. We have some members that are really good about
What up, money
post.
boy?
Yeah, and and then so many times this year something gets news that I'm already in. I'm like, oh hell yeah, all right, let's see what that's doing. And that using the work is something I've worked on a lot, because when we were first doing this, I I was probably like some people in here to I'm like, yeah, shares move kind of slow. I don't know. I mean, if I just use this money on options trading, I can make more faster. And
You greedy fucks.
but it's mentally taxing. It's mentally taxing to
Yeah.
do that, and definitely to size up. Like you size up too much, and then you're like, you're it's stressful. Even when you're doing well, it's stressful.
Ooh,
Um,
I had a great question for you, P. That it's on this
yeah.
topic. So, um, and I don't I mean to put you in the spot or anything, but I'm just gonna assume when you started this, you were broke as shit, like most people are, right? You get a
Oh
thousand
yeah.
bucks,
I mean,
you get a
so
thousand bucks or something.
yeah,
Um,
I like I had a I have a good job.
sure.
But to basically to not be broke as shit, I was doing essay consulting and just stacking up. I was teaching as an adjunct online and in class, like all that kind of stuff to sort of stay ahead.
Yeah. So
It took a lot to stay ahead, right?
so you
So
you have a couple K in the market, or you're putting a couple $100 from a check in every couple weeks
yeah,
to
yeah,
play in the market. Have you mentally crossed the point where you think now you're playing with house money?
yes, yeah,
Yeah.
I
How
do.
big was that for
Right.
you? How big was that?
I mean that was where the point at which I really started to ramp up more of the long term thinking, and it was such a relief to not because I was trying to replace income with trading, and
Very hard.
that is hard to do because I'm good at what I do. The teaching and um, editing and all that stuff, and so like I could just pick that up and do that, and it's like I'm
Riding a
gonna do
bike.
this, and I'm gonna get paid. I'm not gonna get paid that much, but I'm gonna do this, and there's gonna be a check. Trading, it's not that's not guaranteed in that way, and so yeah, I mean, there was pressure to trade every day. Um, I still pretty much trade every day, but I don't really need anything to happen
Yeah.
for it to, and that helps a lot. I mean, it definitely helps a lot with positioning. Like I have some options that they go nuts pretty fast. I mean, go check the notes that I post, and off some of these levels, and something going up $500 in 15 minutes or something like
I
that.
stopped doing that a
But
while ago because I don't want to trade options, and it's like advertising to me, right? Like I'm not watching
yeah,
that
yeah, yeah,
ad. So, but no,
yeah.
I get that.
But anyway, like so now for me, like on yesterday or Friday, I mean, I MSTR, I posted like looking for these upside levels. I made $500 on that in like the first like 30 minutes or something.
Done.
Those contracts went way beyond that. I think like $3,000. The ability now to not care
Yes.
about that,
Yes.
instead of saying, oh, "Damn, I could have paid off this credit card if I just would have kept this option another hour." Like, I mean, that kind of thinking gets you in trouble,
Yes.
especially in options. So instead to just be like, I filled my cup more than I expected today, so I'm good. And MSTR is going to be there on Monday. It could drop 12% on Monday. That's what it does. So I'll just hit it again, and I have with that one for whatever reason the pre-split pivots are working pretty much perfectly. Um, and I'm still confused as to why that is.
Math.
Reprogramming
I know you're an
algos
English
is
teacher. It's hard. It's just math.
yeah, 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 yeah. I mean, it seems so obvious and stupid to me, but then I think, you know what? I'll bet most people don't have these lines marked on their chart,
No, they don't.
so I kind of know something that a lot of these people chasing calls don't know. To it, not through it, and all that. Um, but yeah, no. So anyway, so yeah, the makes you a better trader when you don't have that pressure on yourself, and people chasing losses. I mean, that's something that when you do have that income pressure for trading, that it's easier to fall into that. It's like shit. Well, I lost 200. The market's open another 4 hours. I can probably make that back. And you're looking for a trade to try to make that money back instead of just having setups that you're looking for and waiting for that setup to actually show up and trading that instead. Um, it's easier to make that transition when you don't have that pressure about the trading going
Yeah,
on.
we've all played the game of life, and I think at the beginning, you can go one route. I think you get married and have kids, and the other route you go to college or something. I don't know. I haven't played it in a long time, but I took the other route, fortunately. But I think psychology, it's why we're a little different. I mean, I was still working and just putting money into DCA and in into one play or two plays, really
Yeah.
stupid, and just got lucky. So when I caught on to the COVID market, and it was like, well, let's day trade. The money was already made in the market, so it wasn't like, if to me it felt like house money, and I didn't take all of it. I mean, we all know my sizing on trades with
Yeah.
50K. That's just what I do. That's actually going to switch. We'll talk about that in a minute. But yeah, so for me, I kind of think, again, I took that short path where I've never really had to trade to pay a bill, or or really just to take money out. It's not really a thing how my system's set up. So um, it's easier, but along the way, there's been some CRBPs, there's been some cloves that those are, like, I forgot what CRB. I know clove was like 7 grand, but those are big losses, and I learned through that process you don't want to do that because that will trigger your emotions instantly. Which really got me to focus on sizing. So, I mean, I think that's one of the biggest tools I have, is to be able to say, all right, I don't trust this $8 stock, so I'm only putting 8 or 1,600 bucks in it, as opposed to this is going to work, I'm putting 8K in it. They're just different, and then everything in between, And so that sizing, I think, is my biggest tool to not really worry and hang out on the share side. Um, but again, being able to have house money, so to speak, it just really changes your mentality. So I stress to anybody, even if you're a small account, you got 10K, try to make 10% and then just trade with that 1,000 bucks, because it's gonna feel like you're ahead. And you can build from there. You really can, especially with the stuff we get in this room. So
But we talked before about the hardest trades of the year.
yeah, I got
Uh,
mine's easy. I'm interested in yours, but mine's really easy.
uh, so I've got so I have two, and the first is Oklo,
Okay, okay. Well,
um,
that's a new chart, so
because
I got you.
well because I had this big thesis about AI, nuclear, all that
Mm-hmm.
stuff, and I didn't chase Oklo. Like I noticed it. Um, I mean, the chart was only a couple weeks old when I brought it up in one of our sessions, and I was like, "There's going to be some craziness here." But I kind of waited, and I had it in the ER page and caught puts, on the way down. But under 10 is
Yes.
where I started
Yep.
buying,
Yep.
and I kept buying, and I kept buying, and I kept buying, and I just, I wasn't really, out to average down, but I'm just like, I want a position in this. I'm just gonna keep buying it, and I just kept buying the same amount every week, a few times a week, whatever. And then for that one to then turn around the way it did, and I had no options. I didn't even buy puts, to protect it, or I didn't, none of that. I just was like, I'm just gonna scale in and swing this thing. That was hard for me because it's just so not my style. But the experience of that, definitely helped me. And then the other one that it was kind of similar to that, different sort of stock altogether though, is Ulta. And so I caught Ulta a few times in earnings, and then the day after, but I wanted to build a share position. Now my pivot on this is 408, and so when that first broke down, I started buying it like in like the 380s, and I kept buying, and I bought all the way down. I held through the Buffett stuff. Buffett bought it. It popped back up. I kept most of mine. Came back down again, and now just broke out, and I'm in really good shape here to figure out how long I want to hold this thing. So those are two that stand out, and then the third was Roku. But the hardest part about that trade was actually selling, and you sort
You're
of
welcome.
yeah, you convinced me. I didn't want to because I'm looking at I zoom out and I look at it and I'm like, God damn, look at this 120, 160. Hell, this could go back to 200, and just having that in my mind, and but just taking the win, and then instead talk about just you know deciding not to trust the company but playing levels 60 24, 83 95. Those are my two pivots, and they aren't really exact or anything, but buying below that 60 uh, has worked several times now. So yeah, so I just changing my approach um, to that one has that was hard, but definitely worked for me.
I think with all those, the you learn that your DCA, you're better off if you do like a weekly chart and make your decisions on DCA versus like trying to get in over 2 weeks every single day. You're still timing there. There's no
Yeah,
buying a swing trade over 2 days is still kind of planting your flag. It really is. Like you have to the timing is the secret sauce or the skill that you need to any DCA, because it's hard to anticipate moves and it's hard to anticipate bottoms. I like charts that are like this one. I think you said 60. So my volume profile 60 64 on this. My level's 52. So I like it to get in that channel so I can buy more at my level, but still be in case we get a higher low. I only played this one once, and yeah, we went 52 to 65 and called it good. Um, but yeah, I think everyone should have one or two DCA plays just so you can learn the skill. Like how is this going to work for me? And it does put you in that uncomfortable buy situation. And then once you win on an uncomfortable buy, you're going to see the value in it versus being scared of it. And the more you do that, I think the better off you are. So, um, yeah, P
no,
Alta, man, balls of steel.
yeah, 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 yeah,
God.
right. Well, right, because I usually I don't if companies have like warehouses full of crap like that makes me nervous. I'd like so as a for a longer term outlook because they can get a couple bad earning cycles in a row and you're in some trouble. It's why I don't. I mean, I own some Dick's Sporting Goods, but
Hmm.
I would have owned more if they did anything else other than just have someone grab a bag of golf clubs and walk out the door. Um, but yeah, so one that example of a company that doesn't have a warehouse full of crap that had a similar look to Roku, but that took off and kept going is Twillo,
Yeah.
and that one 6146 was my pivot. So I just bought every time shares
That was
stayed under
auto
there for a
RTL.
while.
Yep. That was auto RTL.
I
Yep.
bought that and I'm just I kept half by now and we'll see from here. But
This is one I have
um,
all of still, but I didn't get a lot of it. So again, that sizing. If I
yeah,
if I had 610K in here, I would have been cutting. But 1200 bucks, I'm not letting this go. I mean, it's worth what, two now? It's we'll just hang out.
yeah,
But that's a side. I mean,
yeah. And the
people should learn. I say that like I normally don't like saying dollar amount. You've been with me long enough. We don't talk money a lot. Um, but for me, like everyone should have those numbers in their head. Is it 120 bucks? Cool. If your POC is it 120K? Cool. But whatever it is, where you can sleep at night, you're not going to worry about it. That start there, and you're gonna. I hate it's only $600. Well, too fucking bad. Do this for 5 years, and then it can be 6K. Like you're building brick by brick. A brick isn't a concrete foundation. It's one brick. It's just one brick. So
right,
build that brick.
right,
Build the next one, and build the fucking next one. Quit dumbing down the size of a win. And that's why I stress. That's why I stress percent so much, is because outside of those $300 options that are really $21, share side, it's what makes you money. Just whatever you have, you get a percent on it, and you should be happy with that. Sorry, a rant there.
No, that that was good.
All right,
Lulu was kind of similar to
let me give you mine.
that was another. Oh yeah, yeah.
Let me give you mine. So, let's see if you can guess it real quick. Real estate sector definitely moved 100% this year, and I think it's down on the year. Big thesis will not go away with it.
Is it Rocket Mortgage?
No, it's open.
Open. Oh,
Yep,
okay, yeah,
it's
yeah.
open.
Open actually. Remember when I was saying some ones in the ditch I want to revisit? That was one of them.
So we've gotten
Yeah,
the sub $2 170 whatever you want to call it to three. We've gotten the sub dollar 170 back to three 250. We've gotten some good moves this year. Um, but it's just been very hard to say, all right, this is what I got, let's just wait. In anticipation, didn't do the greatest job of scaling out on the top of it. So when you get back down to the bottom and you, let's say you're at 30-50 cents a share average, like, do I average back up to this level? It's just been very hard for me to to not necessarily stay in it, but to get back in it after that first $3 run. So um, it was easier to
this
trade
was
last year. It was easier to trade last year for me.
this was an IPO, right? Like back in its
Um,
original when it came out.
yeah, 2020.
Yeah. So to me, what I've always expected, um, and I still do, is that Open is going to challenge that $10 area,
Sure,
and
that's the
I
thesis.
like eight like that. So that's the thesis, and it's still the thesis, and this is where I agree with you that it's so you have shares in the the 160s or 170s or 180s or whatever, and you get that move to 250, and it's like, okay, or it can even go to four, whatever it does. But it's like, okay, I'm just going to keep this no matter what it does, and then you're back to your entry. You're probably not going to go that far below your entry, but how do you do that? How do you watch a stock go 100% and then keep some as it goes, as round trip it?
Well, it's
Um,
because in my head I don't have the next
it's
mentality, right? I have this as a long term thesis, so I'm going to keep some of this. I mean, that's the
right,
difference, and it's just been a hard
yeah,
trade in that regard. Not that I'm down in it,
right.
but I have money allocated that I could be trading with in here, and I missed the 100% move to three where I could have flushed it all, and I missed most of the 250 move where I could have flushed another 50%. Those would have been two great trades if I would have had in my head this stock is shit. So it's just been hard in
I mean,
in,
I
in
said,
that
and
regard.
I said too, and this it shouldn't have been my highest confidence stock. It did well, didn't hold like I thought it would, but Redfin,
I killed
um,
that.
I did exceptionally well at
I
Redfin,
killed that.
but it pulled back. Yeah, it pulled back more than I thought it would. But I've kept some, because of the longer term idea. But now I think we might make these pops towards 16 and then keep giving it back for a while longer than I thought, until things
Wouldn't
kind
you
of
rather
materially
wouldn't you
change in
rather
that sector.
trade that the let's say 10 to 16 versus the 6 to 8?
Yes,
Yeah,
yeah,
it works better for me
I
too.
would, and I think that I mean I use this. This is actually where I started using this phrase with the whales. Kick the can down the road. You can see on the chart where they've kicked the can down the road on these, and they just keep doing that. And I don't. How long that goes on, I think, just depends upon, I guess, just the market, housing market changing in some way, probably related to mortgage interest rates, or something like that. So some kind of, not even just news pops are not going to keep these up.
No,
Um, they help the trade, but you just have to have some fundamental changes to the economics of that sector to get that follow through that they keep buying leaps on. They're buying 2027 leaps on this now. We'll be talking about that. probably next session. But yeah, so they still have that same thesis that we do. They're just not there's not the follow through just yet on it.
Secondary, grab that mic for me. Um, yeah, no, I'm with you. This has been, I mean, even from a TA standpoint, we have, I don't want to go too far back, but you have let's say the original, you got a lower high, higher low, lower high, higher low. It's just confusing as shit. It really is. We do
Right,
luckily,
right.
luckily we have the bottom lifting on Redfin, and Open's the same way. I thought I was still on Open, but it's the same way. Where just that sector needs it needs to happen versus anticipation of happening. But our original entries are still really good, still really early. So yeah, same thing here. Yep, lower, 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 higher, higher, higher. So want to get growth this year. Let's do that real quick.
Yeah.
What is your biggest
Growth is in
personal personal trader growth? Message him.
okay. So for me, being really rigid about some particular trading rules that not what is that noise?
Secondary. I just texted him.
Okay. Right.
I don't think I can mute him. It's yeah, it's not Carlos for once.
Yeah.
Secondary, mute your mic.
Um.
All right, go ahead.
Okay. So yeah, I mean just being pretty rigid about my rules with shares versus options. Like I always say, don't chase calls, don't chase puts. Uh, Following that advice, even when I see, I'm like, oh, okay, you can chase that one. It's not worth it. That's kind of been the biggest thing for me. That uh, staying within my notes I post in the morning. I post plenty of trades there. I don't need to chase something just because I saw it and just because I think it's easy. So just sort of like staying within my system. And it's like in you know baseball, like you're looking for a pitch, you get something else. Don't go chase that pitch
Yeah,
when it's just even when it works, it was the wrong decision. So for me, that's been the biggest growth. It's just following what I say. I think what I post is pretty good setups, pretty good advice. Making sure I follow that myself. I mean, I've gotten better at that.
nice. I think got a little intro into it, but one of the things I think people don't understand about us that's it's out in the open is we both well, we're hard as fuck workers, that goes without saying, but we both do everything we can to prove what we believe is wrong. We
Yeah,
are scientists in that regard. If we find something, we cross check it and try to prove it wrong. Um, Constantly and through our beginning of our relationship, there's been a ton of charts where the TA just would give me an out on our work, right? Like that's just flow. It's just their repositioning, and I seen that enough that I had to start trusting that. And I don't want to stay just trusting the work is where it's at, but it's finding a way to use more of the work throughout the year.
yeah,
Um,
yeah,
and I think I kind of did it last year a little bit, but I committed to it this year. Like I'm gonna let Professor drive the ship. We don't need two cooks in the kitchen. I'm gonna let the sectors he comes up with just find stuff that's complementary to it. If he says something and it strikes a chord with me, make sure to bring it up again over the next 2 weeks or a month to double check in case he misses it. Trying to play more of a complementary role, not necessarily taking a step back, but trying to see where I could be valued at, and that really helped my trading because I started looking at things that I could hold a little longer, which really is what I like to do is swing trade. And I think I only said it for 2 months, but I started that April, May, you can't swing in this market. You can't swing in this market because
Yeah.
it was just perfect. And then we got to where you just needed time because we got into enough positions. But it is using the work or finding a way to use the work better, and refining our system along the way, and just and not trying to be a persona or the top dog. Just trying to be a teammate in here. It
Yeah.
really it did amazing for me because it got me off a lot of my own bullshit. You know, you know, saying that I'm always right and stuff like that, and just kind of getting back to the basics of what we do, and trying to um, funnel that down to where it's processable by other people, and it's pretty obvious what the hell we're talking about. And I think we killed that, especially with like the AI and the quantum computing and even real estate. I mean, we checked in on Redfin being $12 for 3 straight months, at least once a month in voice. So just stuff like that, making table pounding more of a commitment to what we do versus that day trade thing you were talking about earlier. Let people know they can have a little bit of a longevity in a play versus what are we trading this morning at open? Because a lot of people are set up to do that mentally, and it's just not the way. So yeah, for me, it's just that refining the game, and I hate to say it, but it fits the best. Your phrase: use your work, use the work we do. I mean, we put in 2.5, 3 hours live, probably another 2.5, 3 hours prepping for it, and then we're here all day during the week. Just use it. Just use that stuff. So that was it for me for sure.
Yeah, no, and part of the uh, well, the use the work thing where I've had some growth too is when you recognizing kind of the definitive no on something, and so I you had a definitive no on a stock. This was last year, called Skills. I bought it anyway.
Yeah.
It didn't work. I didn't buy like a ton of it, but no, that was my biggest loss that whole year. And so then this year it was so we were on drugstores with Rad. It's almost like when Rad failed, the whole sector died. And so I tried to push Walgreens and CVS because of flow I saw. Um, but you were just like no, and so me just deciding that that was good enough. That I know it wasn't just like an offhanded dismissal, but that you looked at it and it wasn't there, and just recognizing that I I mean I could see the charts were in trouble, but we've traded some charts that look like they're in trouble all the time. But there's something under the hood where it's actually not in trouble to that degree, and this is a good spot to buy it. And then they take off from there, whether it's Rivian or whatever. So yeah, my being willing to do that has been important for me. And then the last area of growth that I can think of is I do try to find like I'll find a big winner in a sector, and try to find the next one. Sometimes like for me recognizing that the next LLY is LLY. I mean, there isn't one. So like that NVO, that was one I tried to get you on too. And you kept it. You didn't like it. We might be to a point where we revisit it now that it dropped 30% on news. But the point is that I was set to buy that thing at like 102, 105, under 100, or move to 120. A couple weeks later, it's $80. So I'm not not going to look for the next LLY. I'm not going to look for the next Spotify. Recognizing that those big winners I found that are unique in that respect. I mean, the next LLY probably is Hims, but it's a
Yeah.
different
Yeah.
kind of thing entirely. That to me is it's kind of a check on any kind of arrogance I would have that I find big winners. I'm gonna go find another one. Look at LLY, see what it did. Check
Coin.
this one out. I'm gonna do that one. Yeah.
Coin.
So right. That
MSDR.
yeah, stay on your winners, and don't always think that I'm just gonna like finding the next one doesn't mean it's probably a completely different sector and it's a new story. And so, like turning the page to the next story is an area where I think I've had some growth too.
Well, yeah, just for me off the rip, I'm well. What's the next Lilly? First thing that comes to my head, well, Pfizer's in the dirt, but
Yeah,
that's where market cap and all that comes into play. You're just never going to get the move you got out of Lilly out of a Pfizer, and I think a lot of
right.
people scrape over that. Like a lot of the reasons you get the bigger percentage isn't good company, it's share structure and insider ownership. It just there's limited pieces out there, so when people go to buy, it costs more. I mean, it's that simple, and I think we're seeing that now with the one we just did, Lucid,
Yeah,
PSNY. Like it's just they're too big of floats. It's just no. I mean, even if they get good news, $2 billion move every dollar. Like that's crazy. Give me something with 100 million, $1 billion move,
right,
and
right.
that's $10. Like sign me up, sign me up. So I think that gets missed by everybody. I don't know if you do, but I live off of that kind of stuff. Book value,
Oh
share
yeah.
construction.
Well, I stumbled into that. I mean, because it just happened to be that recognize that. I mean, it really doesn't take much flow to move MDB. That's kind of weird. And then looking at float size and comparing that float size to Snow or Palo Alto, and I'm just like, well, okay, holy shit, this is like, I guess almost like a low float large cap. And then I'm like, what else is like this? And then all of a sudden, like a lot of the stocks I read fit that. The same thing happened to me with. I didn't really study IV in a kind of encyclopedic way, but I started to recognize OIV stocks, how they move, how the premiums move, what flow looks like, and I have filters customized to stuff like that at this point. And a lot of it is on that. And we, I mean, one of my favorite things we do have me guess insider ownership
Yeah,
or
yeah,
guess, and a lot of times, like I can just look at the option flow
and
and
tell.
get a sense of it.
Yeah.
Yeah, yeah,
Well, you should be able to tell that, and then like is the strikes. If we're on a $60 stock and your strikes are 62,
yeah,
64, and you're excited about it, as opposed if we're on a $60 stocks and your strikes are 80 and 100, that should tell you right there. I mean, that should give you a really
yeah,
good
yeah.
clue on the construction of the float. So,
Right,
um,
right.
um, to kind of not to jump around here, but I just thought about it in that conversation. Not necessarily a pat on the back, but just maybe for people to understand why we stay together a little bit. Um, and it doesn't have to be this year, but I'm assuming it will be with what you said through this conversation. What's the number one thing that you've picked up from my stuff that you apply to your trading? And I'm going to do the same on your side.
Uh, Patience, I think. I mean, because options by nature, like you are impatient, like you need the move fast, but willing to wait for a level, wait for a level, wait for a level. That that's something that I've picked up, and just it's only taken a few times where if we have a line, there's two setups. Either our line's the same, or I have a local pivot just above and a local pivot just below, and waiting, for that moment and putting more into those trades. And I would rather wait for that one trade than do 10 little option trades. I used to prefer the 10 little option trades because it's fun to just sort of be in the market, right? Always be in
Yeah,
it, got
yeah.
something. Um, but yeah, I mean the thing I picked up from you, uh, the times you just say I'm going golfing. I mean, try to do more of that. Try to just unplug, live a little when you can tell the market's not quite there. The one difference is I do trade some downside. So
Yeah.
on some of those days, it is actually a good spot for me. And this is the one my adaptation to as I wait for your level. I'm like, well, while I'm here, it's probably going down, so I'll just grab maybe one put and I'll buy shares with the money from the put, and then that's worked well for me. But yeah, I mean that patience, that waiting for a level, and not just doing all the quick jabs at the local pivots and waiting for the bigger one.
Um, yeah, because I just even in this conversation today, the stupid shit I come up with that reminds you of rules, you're starting to rephrase them into your own. So it's been enjoyable
Yeah,
to watch
yeah.
that. For me, it's that the pre-market moves down, like don't chase puts and calls, and applying that. Well, I have RTL levels, which is pre-market high and pre-market low. So if that's the area that we don't want to chase, if I let that first candle or first 3 5 minute candles form and it's on that level, by your theory, it's not going down. And that, for me, trading that way, small, applying that to my game, has been a good distraction to not overmanage other things. And it's
Yeah.
really helped me to stay on plays, get into some level two that I wouldn't be in, and stuff like that. And actually trade better stocks than just shitty pennies with volume and news in the morning. So that has kind of cleaned that up a little bit. Um, and it's like you went to the dive bar that had hookers and you could buy Coke in the bathroom, and now I'm at the cigar bar. I'm just in a better environment.
Yeah.
I'm just in a better environment where I'm not going to be feeling for my wallet at 10 a.m. Um, that and it, probably the number one thing overall, and I'm in general, I'm a type A personality. I think we all know that. I think I can beat anybody at anything. And through our time, I said it in the RT room. I'm the hardest worker in the room. Ain't no one outwork me, and you've proven me wrong through our entire relationship on that. And it's kept me honest in that regard. And I think if I'm picking that up from you, everybody should be picking that up from you. The difference is for the people out there, you don't need to follow 100 stocks. Just follow 10 because it's very hard to do what we do volume wise. I mean, I have 500 I follow. Um,
Well, I mean, every time we go through that master list, I'm just like, oh God, damn. It's like a lot. And then there's just some that like, oh, I remember that one. Or I stopped asking, is that one of mine? Because it almost always is one
yeah.
of mine.
So
but
I go through that twice a week, that whole list, every week.
yeah.
And it's just part of my process. But anytime that I've wanted to be like, I don't have to do that or that's not worth it, I instantly think of you and how hard you're working. And I mean, the elephant in the room, you're also working a fucking job. So
Yeah.
I got no excuses over here. So keeping me honest in that regard when, I mean, to be completely honest with you guys, I'm all right. Where I came from, I'm gonna be just fine the rest of my days. I really am. I know how to live cheaply or frugally, as we call it. Shout out Carlos on that Twitter exchange. But like for me, I'm cruise control down the hill. Like so, it becomes harder to work. It really does, right? You get a little lazy, and you just kept me honest because I got to keep up with you. So I do appreciate that, and I hope everyone picks that up. That's the difference between me and Professor and most people. We just work hard. That's kind of why I follow that Mando guy. I don't believe in fibs, but he's a hard worker. He just is, and I respect that across the board. So
So there's a one. We can start to wrap up soon, but there's one style of trade. And I don't recall if it was like this year where we started phrasing it in this way. It might be a little older than that, but why do you think mid candle recovery works so well consistently? What is it about the structure of that setup that it almost always is pretty much exactly the middle of that big drop, and then it you know takes back off?
so you're
What causes that?
okay. Let's say you're I don't want to use drugs, but they're they're easiest for me. Let's just say you're an apple salesman
Yeah.
and you're selling apples, and for some reason, you get too many, or there's a shortage, or something happens that brings people running to the store to get apples. Let's use prime rib. Let's just say there's prime rib on sale, and then your buddy goes to the store and it gets around that, bro, there's only like 10 prime ribs left down there. So the the Fidelities and the Vanguards of the world, the people that have the shares, your Charles Schwabs, that they in the down situation, there's just no buyers, and they got a flood of sellers. So they will personally buy them, right? Like the company Fidelity will fill your order. It's not going to another trader. They'll just buy them back at that loss. So if we're on NOV here, it's a good one. Um, it was 105 down to 75, right? Well, they don't want to buy them at 105, but start buying them at 80, 70, 75, and then they sell them on the way back up to the normal people in the market, and you just kind of get back to the middle point. So it's just whatever event the shares just in that day, it's finding high low, and we balance out. They have to make money, right? So you have to average out in the end, and the average out just happens to be 50%, right? That's the middle of the high and the low, and so that's their goal as institute. If not, that's when that move's going to happen again the next day. If we don't, I think that's something we don't cover a lot. If we don't make mid candle, we're probably going to set up another range, whether it's on the low side or the high side of the mid candle that we're currently in, and do it again until we break out of that 50%. And it's that goes back to the why I have the daily volume profile, because those get established in those days, and you can kind of see what should hold as support if we're going to move back all the way through the channel, or if we're just going to continue to bleed out until we get to a level. But it's all just liquidity on a really really short term basis. Again, most people that hold the shares that aren't institutions, they're not running to their, they're at work. It's 8 o'clock. They're not even gonna know they dropped 30% probably for another 3 weeks when they go check their statement. So the active shares that are there, they just create this liquidity pool, and at the end of the day, they usually average it out.
I mean, it remains just one of the best things we do. And the one that made me think of it, I caught this on the downside a bit for earnings, but Adobe, the like that weekly candle, I have a pivot pretty much right in the middle of that thing, and I have a pivot at 437, which it hit briefly, and so I just could kind of, and then the stories in the news are like, oh, Adobe, dropped 20% in a week. Is it in for a rough year next year? And it might be, but I think it's just going to go revisit the middle of this thing before it does that. So yeah, I'm always mindful of that, and it's just one of those things that it works well, and understanding why it works, I think, is valuable. Part of the reason too that you get to that mid candle, you need to get some out of it. Like you go ahead and sell some, because it can easily go the other way and retrace down,
Yeah,
from that.
that's what I'm saying. If you don't,
There's a lot more certainty that it's going to get to the middle of the candle than it's going to retrace the whole thing,
well, if you don't
no
make
matter what.
it or barely make it, it's probably going to continue trend. So if you just make mid candle, that's probably going to
Yeah,
continue the downtrend for a little bit. No, 100%. For me, the
right.
the the down moves on news are easier than the up moves on news. I assume that's the same for you. Um, and
Yeah,
the best ones are just the frivolous ones. Hindenburg trades are my favorite. That Roblox trade was the best because it's just they don't stick. They never ever stick. And to be honest, I learned that with SOS. Um, I bought like on the first candle dip. I think it went to like $4, and it bled out just a little bit the next morning, and then retraced to 8. And I got washed around, and most of that I came out, I think, even or just a little bit ahead on that one. But the next like four Hindenburg reports, the charts did the same exact thing. So you just pick up what news is bullshit and will retrace at least from a pull down spot. Um, and that for me, it's always um, a day trade or a quick scalp trade. I don't really like to hang out in those.
yeah, yeah. Am I reading this SOS chart right?
They're
$7,000. Oh, they did a
yeah, they split like
they did a
16 times.
50.
Yeah,
Oh, jeez.
yeah.
Oh
Stay away.
man,
Well, we don't talk about that one.
I'm just thinking back to that one.
Yeah.
Yeah, I actually caught a pretty decent win on that way back then, but
Ebon too.
Oh man.
Ebon, same thing. Let's get
Yeah.
the secondary question here real quick. How to determine opportunity cost in
Yeah.
swings? What factors do you use either to stop DCAing or sell and use the money to go after other ones? So I definitely, personally, I always have a pretty good idea of how much I want my full sizing to be in. I try to leave myself 30-50% of that sizing to buy on a level. If I'm already on a level when the swing starts, I usually start a little bigger, like 25% in. Um, what was the other one? Oh, to stop. Trends got to change on a bigger time frame for me. I usually have that spot picked out in a chart where I'm like, all right, this isn't good. But the main thing of that setup is I try never to put myself in a situation where that spot is going to be more than a number I'm comfortable with losing. Pretty open. My tolerance $300 to $500. It sucks, but it doesn't like make me jump off a bridge or anything. So that's where I try to keep it. Um, yeah, and then the harder part for me isn't those down buys. It's buying when it's 5 to 10% up or at the top of my channel, looking for continuation. So um, it a lot of that is in that pre-planning, and then once you plan 10 or 15 stocks that way, you kind of can pivot it to make it work with your mentality. Um, but I like to look at scaling into swings on like a 3 week to a month basis to a 3 to 6 month basis. A long term swing you should be buying for 3 months. A short term swing you still should be buying for 3 weeks or a month.
I mean, yeah, I have a similar answer. I'm past the point where it's like, you know, if I have something that's just sort of stagnating, or a swing, I'm down 8% or something like that. Like that I like, well, I'm going to sell this and use that money for different trades. I have money for trades
Yeah, yeah, it's
that
not even
I
a
don't need to, right? So like, so I'm fine with just waiting it out. And because I do trade on swings, to me, I don't like to trade swings just on price action. Like we might be a little different there. I don't like to swing trade a chart. I do like to swing trade um, a story, and so that's what, like, as I commented a second the other day. I'm like, I don't really trade quantum stocks. I'm in them. I'm investing in them. I have a smaller amount in the shitty ones. I sell more of the shitty ones when they make these moves. 50-70%, good enough for me on most of those. But like the INQs and Rigettis and stuff like that, like I've kind of sold what I'm going to sell, and I'm just gonna follow the story and keep that. Um, so so yeah, I have just kind of like, I don't give a fuck sizing on a lot of these
yes. It's
on
important.
Tilray,
It's important.
and stuff like that. It's like I have an idea on Tilray, and it fell below the area where I was buying it, so I bought some more down here, and I'll just wait. There is no opportunity cost to me because I'll let that story play out. It might be a year, it might be 3 years, I don't know, but I can live with that. Whatever it does, I can live with it, and
Yeah,
so
but
I'm just
you're
going to keep
not
it.
10, 15, 30% of your port in that trade. Um,
Never, no,
yeah,
no,
and I think that's a big part of
no.
that is again whatever you're comfortable with, and that Tilray is probably a great example. It's very similar to Open, where we've gotten a couple moves and still getting washed around and maybe bleeding out a little bit more than Open. But yeah, if you have 17K in there, it's gonna be a fucking nightmare. If you have 1,700 in there and you can handle $200-300 risk tolerance, it's not a bad place to hang out and revisit adding when sad. No, I totally agree with that mentality, but I do
How
still
many
think
people?
you need to have that original plan.
Oh, go ahead. Yeah.
You still need to have that original plan of like, this is how much I want in, and and stuff like that. Because if not, you can get overextended in plays. Um, I'm very
Well,
diligent about
never.
that.
So
Go ahead.
don't let you don't let the like don't let a day trade turn into a swing, turn into an investment because you're losing.
Yes.
You want it to go the other direction. My investment in quantum computing turned into a short swing and a day trade on some of those names because of how well they did. So that's the direction you want to move in, not not the other way. People are in AMC the way they are because they force themselves to buy into the story because they're down by so much. So it's like it's not a loss if you don't sell, and they're at 40 cents, you know, split adjusted from. I mean, what do you think some people's averages are in that
Oh
thing?
God. I'm sure there's people that
Like
were in the
50.
60s, 50s, 60s. Yeah, yeah.
Yeah,
Strong.
yeah. And then have bought bought all the way down. They got some hope on some of these pops that have happened, over the years. But yeah. So anyway, so I think like that's a bigger key to me than anything is like if it's planned that I'm going to hold this thing a long time, there isn't a lot that could happen that that could shake me out of doing that. Um, and so I don't go into that. I don't go into bios with that because bios do give you the moves that it's like, well, shit. I guess that's I'm stuck here, like it's in Sava or something. I had some Sava on that drop, but didn't really matter because it was just free shares.
Hmm.
Um, but yeah, I mean, so you don't want to get stuck in something, and so there are situations where I get the story wrong, but for the most part, there is no opportunity cost because I already it's priced in that I'm willing to sit here a long time on some of that stuff. So
Yeah,
that's my answer to
I
that.
don't. I guess I really don't look at it that way too much either. Um, because I try to. I mean, it's counter patience, right? If you're looking at
Yeah,
that, I have to make 1.5% on this money every day, and if I'm not, I'm losing. I mean, it's going to eat at your patience a little bit. So, um, I guess trust yourself and be a little more patient too might help you there. But still diligent with the plan is your biggest protection on anything. Just because, like you're
hold it.
saying,
Look,
you can't get
holding
wrapped up.
shares.
You can't get wrapped up into the day trade to a swing trade to an investment. You got to stick with that original. What were we doing here?
I mean, if you're not, especially if you're an options trader, holding shares in something that where you have some belief, you're protecting your money from yourself a bit
Yes.
instead of saying that I got this 10 grand today that I'm going to buy options with, and I'm going to buy a $3,000 zero DTE spy position looking for a 0.20% move. And you're going to think like, and for somehow to them, that is less risky than holding some shares that are down 10%.
Yeah, you should have, if you 10K, you should have three
I mean,
swings about 2K a piece, and then you should have $1,000 a day to trade
yeah,
options for the week, and that should be your whole account. I mean,
right.
that's how I would do that. I mean, and then
Yeah, exactly.
then you're in 7 trades. You got 7 trades. That's perfect, and you're still the predominantly option. But for me, what that's gonna do, like I say that comfortably because you're just gonna learn what you've learned over the last 2 years that these shares are a little better.
Exactly. And then, one thing I did want to get to, I got asked about it where I
Sure.
said, like, I'm like, I think most traders don't really know what pre-market is. And, and that's why they chase the pre-market moves. They don't understand what's actually happening. And I guess, and then Goose gave a really good answer that was very technical about MMs and
Hmm.
hedging and like seeking to be neutral. But to me,
Yes.
the simplest way I can where this is where gamblers don't understand this. And in Vegas with sports betting or whatever it is, the desire to be neutral and to make profit from a neutral position, that is what Vegas does when they set those lines. They want to get money bet on both sides.
Yeah, and they collect the
And
vig,
so
and they just
the
collect the vig. That's it. They're not winning the bet.
Exactly.
They're not winning a
And
bet.
so in yeah, yeah, exactly. And so in the market, the positioning stocks to a point of neutrality, and then okay, we go from here. And I'm gonna we're gonna sell options from this spot, or buy options, whatever it is that a gambler can't stand that, because that is so far from what they're trying to do,
Hmm.
that they think they're trading against market makers who are trying to win that trade that they're in. Um, it's like me against you.
Not
They're
even.
playing a different game than
Yep.
you, completely. And
Th-
so that is the biggest misunderstanding people have about, and it shows up it happens during the day too, but it shows up most clearly in pre-market
Pre-market.
because
Yeah.
the volume's so low. But that is the origin of don't chase calls and puts, because I can see what they're doing, especially given the option flow I already know about. And so that's my simplest answer there. Their desire to operate from a neutral position is what's really driving a lot of that that's going on
Yeah,
there.
and the best real world example, I think you nailed it, and it was the Super Bowl this year. Too many people bet on the Chiefs. Too many people bet on the
Yeah,
Chiefs, and they lost money. It affected the stock prices
right.
because they want to stay neutral, and that
Yep.
I think you just need to put those two together, Pete, because that's why you get your 50% retrace. What you just said, you explained it better than I could.
Right.
They want that neutral point. Well, what's
Yeah.
neutral? Center mass, 50%, halfway of what it was. If you're $2 and $1, $1.50 is the middle. It's just how it works. It's all math,
Yeah.
and
Yep.
I think you see that constantly, constantly, and for me, I learned really. I've said it a million times, but when I started this, I was like, all right, I'm buying this stock, and it's moving $1. And that was real hard to do to make my $1,000 goal, right? I'm gonna buy 1,000 shares. Stock's gonna move $1. That was my whole setup when I started swing trade or day trading. That's it. I'm just move $1. We're good. I got enough money that I can put it in there to make it valuable to me. And market makers, if there wasn't $3 range on that stock, which I learned, it's probably not going to move $1 because that would be center mass, right? Like, so you have to find stuff that has the range, and then have that range be good to you, because that's probably going to happen. And then it comes down to buyers or sellers, right? That's where level two kicks in. Is there more buyers than sellers? Is there big money buying here or not? Um, but for me, that's it's the stuff that I think gets overlooked that really affects charts. And I think that's also why when someone says, when we just revert to you're chasing, that's the stuff that makes us think you're chasing. All of this little mechanics of the charts, the market makers, they, option flow, and whatever event that's actually pushing that stock on that given day.
Absolutely. And like the chasing, and I mentioned this with like growth before, like that it can work. I mean, especially in options, you can chase and you can make money, but you want to be in a position where there's more room above than below, and that time frame, it has to be on the smaller time frame if you're trading options, that this pivot's going to probably hold up, that under consolidation underneath it, it's going to come back and try to recover that, and then that trade to that pivot needs to be good enough, or you set yourself up to have a runner. But again, another thing I say over and over: if you're going to hold a runner, it has to be running. You don't want a runner that's just going to go to zero for the hell of it. That's not that's not the way to be either. But yeah, chasing can work. It's understanding that, um, if you break your rules and a trade works, that still understanding that you shouldn't have done that.
Don't
And
erase
if
the
someone
rule.
is
Don't erase the rule.
yeah, don't erase the rule, right? It's like if someone's a gambler hits a 6 leg parlay. Congratulations.
You know how
That
many
was some
times I
nice luck.
bladed a 5 iron and I'm still on the green. I'm not gonna try to. That's not my shot.
Yeah,
I'm not trying to do that the next hole. Oh fuck, we bladed
right.
that last 5 iron. Let's do
Yeah,
it again. No, no.
right.
Just because it
Yeah,
works once doesn't mean it's gonna work again.
Yeah.
nor that it's the safest and most effective way to do something or easiest mentally. I don't think we touch on that enough. Like,
Right.
the trade could be great, you could win, but fuck, if it just ran you through a ringer, you weren't sleeping for 3 days, and your heart's racing, that ain't sustainable. Like, find some easier shit. Find something that's easy for you to work, and that's why our styles are so different. I assume because what works for me, it probably wouldn't work for you, and what works for you probably wouldn't work for me. And it's not that the skill set, the account, what we're seeing is different. It's just who we are as people and the emotional attachment we have to certain things and what triggers emotions. So I think that's again something that's just overlooked a little bit. But you have to figure that out, and we can't help you with that. That's not something that we're not psychologists, right? Like, but
Right.
those trades kind of teach you that along the way.
Yeah. Yeah. Absolutely. The uh before we wrap up, did you want to talk shop a bit about like newsletter stuff, or we want to do that later?
We do that later. We do that later. Let's do that next week. Or if we want to
Cool.
do
Yeah.
that, let's kill this and we
Got
can
it.
just do that without recording.
Yeah. Yeah. I'm up for that. I just had a
Yeah, okay.
couple quick.
Let's wrap this up then and then kill it. So final thoughts here. Looking back, remember this
Yeah.
is the look back. Next week we're gonna look at probably a lot more charts
Oh yeah. Yeah.
with the 2025 outlook. That where this is kind of more just a review. So you got any final thoughts here? Or?
Yeah. I think the market had an incredible run, this year. And I think for me, not letting that cloud my judgment for next year is important, and I think that cuts both ways. That not thinking, okay, we went up a lot, we're done, and also not thinking that some of this stuff is entitled to go higher. I mean, that was my biggest criticism of people with the Amazon trade that got wrecked on that, and I think they capitulated and then it went up again. But it's just this idea that like okay, this one's lagging, so yeah, I'm going to get 20% here. It just staying within our system. Our system defines what moves we're probably going to see, and keeping that in mind for next year is just so big for me. So looking back on the stuff that worked and why it did, and then trying to carry that forward and just refine the process is kind of where I'm at mentally on that.
Yeah, I always critical first for me. Just who I am. You want to get better. Good has to question to be great. You got to question good. Just how it is. Um,
Yeah.
I gave up way too soon on the A's, the Mag Seven, all the eight Netflix, all that stuff. I gave up too early, thinking, the moves had already transpired. Um, which
Yeah.
I'm they probably still not going to stop. Only one I really did great in was Tesla. Um, Looking forward though, I think we were early this year studying the B's and the C's, and I think that's really going to pay off. So I think that leg where I'm very hopeful, very optimistic, licking my chops over here that we are going to continue even if we do get a little pullback, normal pullback, needed pullback. Every other market in history gets it pullback. When we get that, I still think those names are going to be the better ones going forward. So still can get into some of those bigger names, especially if you're a 5 or 10 year guy. I know it's hard to buy Netflix at 900 and Facebook at 5, but um, that monthly DCA will help you there. And the B's and C's, I think, very very promising going forward. And we've covered them for so long that it's when they start to pick up, um, it's just going to feel like a trade. It's going to be the 3 to 4 months down the road where you're like, wow, this chart really has moved.
Yeah.
And CCL a good example of that this year. What I'm talking about if you need it in chart form. Yeah, that's a good example.
Good stuff.
Perfect. Awesome. Yeah, so I'll post this, and then yeah, just plan on the same stuff next week. So do appreciate the time. Do want to thank you for the another great year, Professor. It's a pleasure working with you. You surprised me by the stuff I learned from you constantly. Yeah, you're just so docile that you surprise me a lot. So keep up the good work, man. I do appreciate it.
I appreciate it. No, I appreciate you too, and I think I mean it's I'm really glad to not go this alone. I mean, I think it's just been really valuable for me to get your perspective and then just our workflow. I think I mean I could trade by myself probably and do okay, but it's just a lot more enriching and rewarding to do what we do. So I appreciate that.
Yeah, definitely. Awesome, awesome. I appreciate Carlos Secondary, King Boo, everyone that showed up today, and yeah, look forward to having a good year next year.